Hello traders, welcome to the live stream. Just give it a few minutes as per usual. Just want to give everyone an opportunity to jump in if they really want to. Let me know what you guys are up to today. Obviously, we've had a big data drop from the US CPI figures, which is big data right now. So yeah, it's going to be very interesting to see what happens next. Obviously, US equities getting burned at the moment. So yeah, we'll talk a little bit about that. Talk about how that could affect sort of the prices of the stock markets. Could that even bring us into some areas of potential interest for stocks? How's that going to play on it in this sort of short, medium term as well? So I'm going to go over a few things like that. Also some charts of interest just from my perspective as well as usual. But yeah, let me know what you guys are up to as well. Hi Royston, hope you're doing well, mate. Yeah, rainy day in Wales. Yeah, it's a little bit rainy up here as well. Hi Vincent, how are you doing? I'm doing really well, thank you. So let's talk about the data drop first. We had, let me just change the view of this. Let's just zoom in on the news. So obviously super important data that's just dropped. We had the, this is the data for today. And 1:30 p.m. we had the US CPI data drop. Let me just refresh the screen because the numbers should be there. There we go. So yeah, US CPI figures came in. Now, there wasn't necessarily too much in terms of aggressive change here. Obviously, we have seen the numbers kind of come in a little bit above expectations from core CPI point of view. CPI month on month remained the same at 0.3%. It was forecast to come in just a little bit lower. And then we've had the CPI year on year come in at 3.1%, which really is above the expectations. Expectations were at 2.9%. So obviously we've had a little bit of a disappointment there from a lot of the sort of expectations. And we've kind of spoke about this dollar missing its sort of targets in terms of, or missing its expectations for the past few weeks. And that's what's kind of fueling this dollar strength at the moment, especially the fact that how is this going to affect the way the Federal Reserve will play out with interest rates? There's a lot of expectation in the market that the Fed are going to start cutting rates. And first of all, it was going to be in sort of March meeting. That has been pushed back. And, you know, there was expectations even from the sort of last meeting that we could have got some kind of rate cut. Like I said, though, I don't really see that happening right now. I think it's just going to get pushed back. When will they cut rates? That is the only next kind of question. And in history, they only usually cut rates when something really bad's happened. So I'm expecting the point of the fact that we had that soft landing in the market. I think they'll keep interest rates higher for a longer period, as they've kind of said in previously. Now, that could obviously play into the sort of negative in terms of the stock markets, because if obviously rates stay higher for longer, it costs more to do business. Now, on the flip side of that, obviously the stock markets have kind of rallied due to the fact that there was expectations of a cut, right? So there's a kind of balance in play at the moment, and the S&P 500 was hit kind of a large milestone this week. It hit that sort of $5,000 level, while it was actually last week. It came into that $5,000 level. We even rallied all the way up into sort of 5,000, and if I can just drag that up into highs around 5,050. So huge milestones on the stock markets, but we are starting to see obviously that CPI figure having a really negative effect here. Now, is this going to be one of those where it has a long-standing effect, or is it going to be one of those where it gives people opportunities to buy in? Now, for me, Obviously, we've spoken about this in the past as well, but if I just go to the weekly chart, there have been numerous times where we've had sort of rallies breaching all-time highs, a few weeks of pullback, and then extensions away. We obviously always get a little bit of a pullback in the stock markets over sort of weekly periods. That's what I'm kind of looking for at the moment, because now we've breached this high in here that formed back in January of 2022. I do think the stock market has legs to go to the upside. It's just where is the sort of area where we kind of look for those longs to potentially come back into play. Now, from a weekly chart perspective, there's obviously this accumulation down through here, which came to that sort of 47.84 area, and we've breached that rally to the upside. So that would, to me, would be the sort of natural area for me to want to look at potentially getting long in the S&P 500. However, you know, there are a couple of levels down on the way which we need to kind of take a little bit of a note of. And basically, I've just marked up the daily chart with a fixed range volume profile tool. I do this because visually it just shows us where those kind of accumulations are in the market, where that kind of volume picks up. But anywhere where you see sort of the market kind of making, say, like a rally, high and lows and things like that, that there is volume being built up. Okay, so to me, if price comes back towards that volume, it's going to do one of two things. It's going to be accepted back within volume, so price could trade from one side to the other, or it's going to reject volume and continue to drive to the upside. Now, obviously, that has a negative effect. We're coming up into this sort of US Open as well. So, you know, will that continuation be felt through the sort of US session, or will we see some kind of rebound? Now, from a 4-hour perspective as well, you can see again, we're kind of coming into an area of sort of accumulation in here as well. Sort of the volumes really start to pick up where price is kind of coming into at the moment. So I think this is a good area just to start making notes of what's happening. You know, if we do see that continuation or a slowdown towards this kind of area here, towards that sort of 4900 area, then that could obviously lead to the market kind of finding its feet again and kind of continuing to push to the upside. Would I love price to be back down at 48? Absolutely. I would love price to be down here. I think this is a great area to get involved with the market. We know we can place stops below the range lows, and, you know, hopefully the market can continue to trade to the upside. But we'll see how the US market takes this inflation data. You know, we do have retail sales data coming up as well. So if that performs poorly or doesn't run necessarily hotter as well, then maybe we will get a little bit more of a downside drag on the S&P 500. But this isn't just felt across the S&P 500. Obviously, US stocks just really kind of tanking on this news. We had the NASDAQ kind of hitting those 18,000 highs, is now kind of dropping back. You know, I quite like this area down here towards these lows, around about 17.2, which could be something to look for. Got 200 moving average there on the 4-hour time frame as well, but essentially these daily swing lows. So, like I said, stocks are having a little bit of a bad time at the moment because of that inflationary data. But I expect this to bounce. I do expect it to bounce. I'm just kind of looking for opportunities of where we could potentially see that bounce from. Hi, right, guys. Sorry, I was just on a little rant then. So, hi, mate. Hope you're doing well. Royston, a pair that I believe you flagged last week is Swiss yen, and I've been following it to the downside. Could you share your view in it? Yeah, let's go take a look at Swiss yen. Swiss yen was obviously a very interesting market. We did actually start to get price kind of start to sort of breach the range, but it didn't kind of follow through. If I just kind of extend that range to the downside here, we had a lot of sort of yen weakness coming in, and price kind of shot back to the upside. So I think on the Tuesday we were talking about price coming into these lows, and I think I'm pretty sure I mentioned it then. I don't really want to get short at range lows. It doesn't make sense to do that. I'd rather see price rebound and kind of get towards the range highs before looking to sort of short that market. Or if we breach, I'll be looking for kind of a break here. But price ultimately at the moment is still trading within the range. It's still kind of at these 2 points. So I think if I'm short here now, I don't necessarily think that's the safest way to get short. I would almost expect price to try and trade back towards the range here. 171.50, I've got an alert set at. I would love to see price try and breach this high and fail. I think that's a really good area then to kind of, from a risk reward point of view, we can look to, or I can look to get short in at those highs. First targets can be the range lows, and then if it breaks and continues lower, it's more of a bonus at that point. But like I said, if I'm kind of short Swiss yen or thinking about short Swiss yen, I like to be short at the highs of the range. So I'm looking to see if price can kind of extend into the highs there. I'm happy to miss out, to be honest, on this kind of chop. But like I said, if we can kind of breach essentially these lows in here, break that 50 moving average, close below it, I think the momentum can then swing and start pushing to the downside there. So Swiss yen is definitely still something on my radar. I'm just kind of seeing if that yen strength will follow through. At the moment, I don't necessarily think it is. I think this is more of a Swiss-driven move on Swiss yen at the moment, because if we just highlight the kind of change table over here, one thing I like to do is just kind of highlight the currency pairs and highlight them in sort of a block. So dollar yen I can see is to the upside here, Aussie yen to the downside, CAD yen here. Let's have a look at euro yen as well, pound yen in there. So to me, just from looking at those already, I'm looking at that as more of a sort of yen weakness move. Although sort of Aussie yen is to the downside there, I can see that 1, 2, 3, 4 pairs are trading higher there. If we look at sort of the dollar complex, the dollar might have been, could be the driver behind dollar yen obviously rallying higher. But yen definitely showing some slight signs of weakness right now. I mean, a chart that I do quite like the look of for a yen weakness side of things is a Kiwi yen long. Now, price has kind of traded through this key swing high here at 91.50. There was a fairly large sell-off there in the past, so it is a little bit more of a sort of riskier option. But if I just kind of zoom out a little bit, so 91.50, let me just put a resistance on there. Around about this 92 level up to sort of 93.50. Let's just go to a weekly chart. These highs here that formed back in 2014, and we've also got these kind of highs here back in 2015, around about 92.40. So I quite like the idea of potentially seeing Kiwi yen move a little bit higher. Kiwi's flagged up on my currency strength meter as kind of one to watch in terms of its getting stronger. I think last week it had one of its sort of best performing weeks for a while. So I like the idea of potentially trying to follow that a little bit. I know Kiwi employment figures were pretty good, so I'm expecting to see maybe a little bit of bullishness in this market. Now, obviously, that high that formed back in December of 2014, January 2015 would be a good level to kind of get out of this market, because obviously we saw sort of downward pressure for about 5 years after that. So that would be a really good area to see sort of price go and target. Obviously above that, we're looking all the way back to sort of 2007, where price was up towards that sort of 97.50 handle. So I like the idea of potentially seeing a bit of a move up here on Kiwi yen. I was looking at sort of the daily chart here, and I saw that we had this, again, accumulation. So we know what that means. That means there's volume built within this area. Sorry, let me just change the color. Let me just see if you can see that a little bit better. Volume built up in this area. So I was just wondering if we would kind of pull back down and maybe look at a bit of a long towards this area here. So that's what I'm kind of looking for so far. Alternatively, if I look at the hourly chart, I can see that price now really struggling to kind of make consecutive lower lows there. So I'll be keeping my eye on Kiwi yen, because this one may sort of take out the 50 MA, may climb above it, and that may kind of spark a little bit of fresh buying in here. Plus, I expect dollar yen to just trade a little bit higher. We've been looking at sort of dollar yen recently. I was very close to getting long dollar yen at 149.32, but obviously I saw that the CPI data was coming out, so I didn't really want to jump in before that. But obviously we've now breached sort of that 149.75 level of resistance. The next kind of resistance level for me is back up towards the November highs, which is that 151.80. So that's the kind of next target point, I think, for dollar yen. So if I think dollar yen's going to reach that area there, then there might be some yen weakness that kind of follows through with that as well. So I think anything up to sort of 151.40 and above would be good to kind of remain fairly bearish yen. So just to kind of round that back to Swiss yen, maybe price will kind of continue to remain range bound here until one currency really kind of gives up. So yeah, I like the idea of being short this market, especially below this sort of 169 area. But at the moment, I feel that price is range bound. So the only idea for me to get short would be up at that 170, 150. That's where I'd feel the most comfortable anyway. Hopefully that makes sense, Royston. Other charts of interest then. So obviously there's been sort of some big data today. One chart I actually really like the look of this week was silver. Now, obviously that data has put a bit of pressure on the metals, and we've seen sort of a move down here for silver. But what really brought the attention of silver to me was the gold-silver ratio. And the gold-silver ratio was up at this sort of weekly area here, and the market has kind of come back into that point. Now, what this typically tells us is that where the sort of value lies in trading sort of gold and silver. And for me, I don't tend to look at this too often, but it's just something that I like to look at when I look at either trading gold or silver, essentially. And I like the idea of the fact that it might just be more valuable to us to look at a silver long rather than gold. However, if I go and just check out silver, if I look at it from a sort of technical point of view, we're back in towards these $22 lows. It can go lower. Obviously, if that dollar strength does continue, then it can breach $22. It can come down to that sort of $21 level. So we've got to be very careful of that. However, I just like the idea of potentially just watching this market in and around these swing lows. Can price kind of maybe come a little bit lower towards that sort of, like I said, $22 level? Can it just kind of find a little bit of support here? I would have been fairly bullish if we breached 23.40. If we breached 23.40, then I think these highs here would have been a little bit vulnerable. But at the moment, it's just something to just keep on your watch list for now. I've got it on mine. So if I do see anything significant, then obviously I'll point it out in the future. But the market's pretty range bound. And you know me, again, I like trading ranges. I think, if price can test in this level here, can it fail to kind of make any new further lows, then great. If it doesn't, if it breaks through, then maybe there's a short-term sort of opportunity for us to trade down to these kind of October lows. So yeah, maybe there's something there for us, maybe not. We'll keep an eye on that one. Gold, obviously, really interesting as well. We're kind of trading within this weekly range. $2,004 area at the moment is trying to hold up as support. Whether it will or not is another question. But I think if we breach here, then yeah, very similar to silver in a way. If we breach, then there's a potential for a move down towards that sort of 1978 area as well. So gold is an interesting market at the minute. Obviously, sometimes gold can be a little bit of a hedge to inflation. Whether we see that come through again, we'll have to wait and see. But inflation's not necessarily climbing. It's just not sort of coming in lower than expectations at the moment. So maybe we will see that dollar strength just kind of force gold to trade lower. Apologies for that. That was the dog. Staring at me at the moment. Right. So let's just go on to dollar Swiss then. Sorry, Vincent, I can see your message there. Dollar Swiss long, I've been waiting for my entry, but haven't got one yet. Yeah, I actually got long dollar Swiss, and Ended up coming out at 0.88, and price is currently 0.8860 or 50. Sorry, so I've missed out on sort of a 50 pip climb there. But I'll show you where I got in, just to kind of show you how maybe you could have got into this entry. Now, I missed my initial move. Let me just bring in my trading terminal here. So this is the trade here. Got in long there. Exited at 0.88. So, yeah, could have easily left this one. But I, running the risk of CPI. And to be honest, I set my targets at 0.88 because that's where we'd been talking about for so long on dollar Swiss. And I ended up taking an entry after price closed above the 50 MA on the 30-minute time frame. So that's usually a sort of trend following system I like to use. But essentially, look, this was the level of interest that I was watching. Price came into that sort of before London Open on the yesterday, and we rejected, and price then closed a little bit higher. So I managed to catch this sort of 8:30 candle close, and ended up going long, stop loss just below the swing low here, and ended up banking just out of there. Could I have left it in? Absolutely. But I do think now that it has got some room to go. This was the sort of where I got stopped out originally. So I wasn't too sort of close to my original sort of positions. I mean, this would have been nice if I didn't get stopped out. I had a really tight stop loss there. So that would have been a really good sort of risk reward ratio trade here. But unfortunately, I got stopped out on those ones. So got my revenge on dollar Swiss a little bit. But yeah, if I just bring in trading view again, dollar Swiss, we were talking about sort of longs since the 16th of January, and it only really started to produce really good long opportunities once it found support here at the 85.70 mark. And yeah, as soon as we kind of went into that daily sort of impulsive phase, that's when the opportunities really came about. But this was the target, 0.88. We've broken that now. Could price kind of push towards 0.91? And I think if it does, you've got plenty of time. There's no rush into trying to get into anything here. I think we just do the same thing. We just look for price to form lows. Does it come back into those lows? Does it find and respect those lows? Or does it, just go off without us? We'll have to wait and see. The thing is, for me, the strength and weakness obviously pointed this out as well. But, if the dollar index can remain above 104.50, then I think the idea is that there's a potential for the dollar index to go to 106. If that happens, like I said, there's plenty of time to get on dollar Swiss. So don't be too disheartened that you haven't managed to catch anything here. There's plenty of markets that we talk about that I don't particularly jump on. So they're just opportunities that will come around again. 0.89 could be a bit of a troubling point for price. So if price does reach that and start to pull back a little bit, then we might get another opportunity as well. But yeah, I'll just watch the daily chart now, Vincent, and just keep it on your watch list every night. Just have a little look at it. You might find that price comes up a little bit, and then when you start seeing a little bit of a slow pullback, that's when we need to start taking notice and see if there's any kind of areas where we can try and capitalize on a bit of a move here. Like I said, that was our sort of reasoning to get long down through here, and it took a while to even form an opportunity. But this is what I like about these kind of situations here. Although the market was telling us to be long, you get phases in the market. You get those impulsive phases, you get the retracement phases. They're not picture perfect, but if you go to a 4-hour time frame here, you can see that the market starts to create lower highs at that point. You don't particularly want to see that if you're going to be a buyer, even sort of lower lows. Now, price failing to make a new low was a big sort of point then to say, the market could continue higher. So, we caught the sort of, or we could say we called a good sort of run in the market, but, I took multiple trades on dollar Swiss. Not all of them were profitable. A couple of losers, a couple of winners, but you know, we've just got to try and catch them when we can. But look at the 50 MA there. You know, I could have ignored every opportunity and just took 50 MA bounces on the hourly chart, and I would have been profitable on all of them. So sometimes we've got to make trading a little bit simpler. You know, sometimes it's not necessarily about the strategy you use. It's about, can you find a market that's trending? Can you find a market that's making the right moves? And then go from there. Sorry, let me just... get rid of that. Raheel, pound US dollar analysis, please. Yeah, let's jump onto cable. Cable's an interesting market to me. Actually did a sort of short video on cable today. Really interesting market because at the time of doing the video, we were breaching back within this range area, which I thought was interesting. I thought that if we held above the range after CPI, then the market could go and advance towards 128. That wasn't necessarily to be the case anymore. We've got this kind of flag pattern that formed at 126.25. We've breached that now. So could we see a move down to the downside? The only thing with cable is we've got speeches out of Bank of England Governor Bailey. We saw a speech yesterday. That was at Loughborough University. The next one is in front of the Economic Committee, I believe. Let me just double check that. Yeah, the Economic Affairs Committee in London. So that one might be a little bit more sort of volatile for the market. But before that anyway, we've got CPI year on year expected to climb. And previous data came out pretty well. So we had the claimant count there coming at 14.1, which was above previous and with revised figures. And we've got GDP coming out towards the end of the week. And these forecasted figures are showing, you know, fairly strong figures. So do I like the idea of essentially being involved with cable at the moment? Probably not. Although it's a market that I think will move, you know, I think it's going to be very sort of data driven, and we're going to need to see, you know, where price can come into. So I'm not necessarily interested in cable here, but I would be interested in cable if it came to 125.25 or if it was up at 128. Will it get to 128 this week? Probably not. But we'll have to wait and see. At the moment, I can see there's a bit of a consolidation here. Price is kind of bouncing around a little bit. So the only thing I would really kind of look for in that situation is range plays. You know, market coming down towards sort of range lows down through here, down towards that 125.80. And maybe the range plays up towards 126. But we'll have to wait and see. We'll have to wait and see how the market kind of reacts at the moment. Obviously, that data is fairly significant. If I look at sort of getting rid of all these, you know, you can see that we obviously found lows down here on the 8th of Feb. That's going to be an important point. You know, buyers got involved at that point. So are they going to defend that area, or are they going to give up? You know, we'll have to wait and see if price can maybe kind of form a little bit of a hold here. But we'll wait and see. 126.25 was the sort of quarter number that I was looking at in terms of just, you know, running through the middle of that sort of lows of the range. So look at all that chop in there. Let's have a little look at some volume. Don't know if it will give us much to go off. So really speaking, this is where the volume's kind of trapped at the moment. And, you know, we're finding support at the lower range of the volume, or the value area low. Got a value area high at 126.40. So, you know, if price kind of makes its way back to 126.40, rejects it, you might be able to play that range. That's kind of what I was sort of suggesting there, just having a little look at that range play. If we breach out of volume, then that's a different story, because price may want to go and test other areas of volume, which would bring you down towards that 125.25. This is a big area, I think, for price. So that's why I'd be kind of keeping my eye on there for cable. seeing if it can kind of stay within that volume area or breach it somehow. But that's going to be a difficult market to watch out for, I think, because of obviously the sort of pressure on the US dollar at the moment. You know, I like dollar longs. I think dollar long is a good option to look at the moment. But do I like it long against cable? Probably not. You know, dollar yen, yes, yen's getting weaker. It's very sort of obvious to see that. Swiss is getting weaker as well. So those would be where I would go and sort of look at the dollar the most at the moment. Hopefully that makes sense anyway. We can have a look at some of the markets. So like I said, the other markets that kind of piqued my interest were anything against Swiss that I thought would potentially kind of maybe form a bit of a sort of reversal against it. So the only ones that I could probably think of, which bring down the currency strength meter here, you can see that we've got the US dollar obviously coming into that sort of +5 area, that crossover on the Swiss franc now, which is what we were looking at for those longs. CAD is starting to kind of fail. So there might be some opportunity on CAD to weaken. So maybe Kiwi CAD longs could be something to look at. But the one thing I was kind of looking at was we've got Aussie here. Aussie's in a really sort of situation of reversal at the moment. Do we have that confirmed yet? No. You know, like what I usually like to look for is that to start to kind of push back higher. As soon as I start seeing that, then that gives me a little bit more information to work with. And this is based on weekly charts, right? Well, daily charts, but from a weekly change. So, you know, when we started to see the dollar sort of start to pick up again, this is when we started to get interested in being a buyer of the US dollar. And you can see for 1, 2, 3, 4 weeks after that, the dollar's been bullish. So that's how we kind of use that information there. So the Australian dollar still a little bit weaker at the moment. Can it offer a bit of something in terms of a reversal potentially? So Swiss franc obviously getting weaker. Could Aussie Swiss be something we take a look at for an opportunity? Let's go have a little look. So Aussie Swiss has found support down here, 56.30. We've rebounded. You know, we're coming back into these swing highs now, and this immediately will sort of put me off getting long, okay? Because price isn't doing what I'm expecting just yet, okay? So I always think of it, so this is just to kind of go on a rant, always think of why you want to get involved with a currency pair, whether that be strength and weakness. It can be sort of fundamental driven. You know, a good way to do that is kind of combo both, and then you've got a good sort of understanding of why a market could potentially move. And essentially, what we do then is we want the sort of conditions to be met. Okay, so for me, I like to do like a 2-step process, and that's what. If I just actually bring in, let me go to my strength and weakness chart. That's what this essentially is. Okay, so I look at sort of the currency pairs of interest. I then put them into what the strength and weakness is telling me in terms of my strength meter. I then look at the monthly and the weekly closes. I then look at some other information with regards to momentum. And then I look at the daily trend, daily phases, and then I'll make comments on sort of the currency pairs that I want to be watching. And then I note what those daily closes were. Okay, so that comes into my whole situation of what is the why I'm getting involved with? What are then the conditions surrounding that market? Are the conditions met? And if they've got a green sort of box next to them, that means the conditions are met for me and that I'm looking for potential opportunities. Now, Aussie Swiss, the conditions are technically met in terms of we've got a potential for a reversal. Price is bullish at the moment, but at the moment we are at resistance. So I don't want to be a buyer at highs. I don't want to be a buyer at resistance, because that is a sort of high risk trade in terms of my risk reward ratio is rubbish. Price could come all the way down here before it makes its move to the upside. So two situations for me. I need to see price either back at support, or I need to see price break and close above an area of resistance, which means that the market may go to the next level of resistance, which could be up here. So Aussie Swiss on the watch list, but definitely just keep your eyes on it from a point of view that, you know, the market could obviously continue to sort of stick around for a little bit. Like I said, we don't technically have the strength from the Australian dollar yet. I have put it on my watch list for a reversal because sometimes I like to look at it early just to see if we can get a little bit of a better sort of entry into the market there. But yeah, Aussie is definitely on my radar. One market that's obviously been performing pretty well is Kiwi, like I said. So Kiwi Swiss is a little bit different. You know, I can see from the daily chart, prices has broken through sort of multiple sort of minor highs here. We've had that sort of channel break as well. The market's just coming up in towards that sort of 5,400 area. Daily chart, we had a daily bearish close yesterday, so I'm still looking for, well, I was looking for the turn essentially. This area would have been a good point to look at, you know, down through here, because the market has made lows, right? And it's come back into those lows. So maybe if another drive into that level there could be a good area to look as support, and price may be able to drive higher at that point there. So I'm going to set an alert. It's 53.40. And we'll see if price can kind of make its way back up to that sort of 0 spot 54 handle. Again, let's just have a little look at the hourly chart. Yeah, quite like that idea. If price can come back down, we may have missed the opportunity there, but if price can kind of come back down on Kiwi Swiss, there might be something for us here as well. But like I said, I was focusing more towards opportunities on Kiwi Yen at the moment rather than Kiwi Swiss, but that's a good opportunity to kind of pick out and take a look at the moment. What other charts did I like? I liked sort of Euro Kiwi as well. Price has come up into highs again. Really good sort of movement into that level, which is something I like to look for. Lower time frames haven't given me anything yet. 15-minute hasn't changed trend, you know, and I was just kind of monitoring the daily closes here as well. So really strong bullish daily close on Monday doesn't really give me the opportunity to start looking for shorts. I like to see it kind of the daily close match up with my bias essentially of what I'm looking for. And yeah, daily bullish close, that's no good for me at this current moment. So I'll keep an eye on Euro Kiwi because it still could be one to watch in terms of opportunities to the downside, because, you know, you've essentially got this sort of channel being formed in here. Weekly time frame, a little bit on the bearish side as well, apart from the fact that kind of finding support down here at 174. But if we were to breach that, you know, we've got a few levels of interest in there. So yeah, definitely something to still watch for. I'm just kind of keeping an eye on how price reacts here at the moment, because obviously after that CPI data, Kiwi did find a little bit of resistance in terms of movement to the downside. But again, in a bit of a range there on Kiwi, so keep an eye on that one. Aussie dollar trading lower as well, coming into support now though, so again, just gonna have to keep an eye on these. Euro dollar breaching 107.25, so we need to see a strong close. I think this days like this are good because obviously data brings in that sort of volatility in the markets, bring in those volumes, and we see some decent movement. And yeah, we just need to wait for some clear closes in order to really start to kind of jump on anything, I think. Because obviously the US session could come in as it is and could start to sort of reverse things slightly. But I am going to keep an eye on these equity markets. I think there's some potential opportunities for us around the sort of S&P 500. Maybe even if the Dow can pull back quite significantly. I'd be happy to see a move down towards this sort of 37.8 area on the Dow in particular. So yeah, keep your eye on your stock markets. That'll be, I think, there'll be some good value potentially in these markets. So yeah, that's where I'd be focusing a bit of attention. Other than that, guys, that's about it. We've got some other data obviously coming up this week. So tomorrow we've got that CPI data coming out of the UK. We've got Bank of England Governor Bailey speaking. So it'll be fairly quiet from the US side of things, but UK side, so cable could be something to watch out for. And then Thursday, we've got another big day. We've got employment data out of Australia. Maybe, you know, expected to come in a little bit higher. Maybe this is where we start to see those reversals on the Aussie dollar. GDP data out of the UK and retail sales in the US and unemployment claims. So Thursday is going to be a big day. So by the time we jump on stream, there's going to be a few markets to watch then as well. So we've been running for about 40 minutes, guys. That's how long I usually like to run these. So I'm going to leave it there. Just give a few shout outs. Thank you to everybody who commented today as well. So Royston, Vincent, Ryguy, Raheel, thank you for your comments. If you did enjoy the stream, please hit that thumbs up button. I really appreciate it. And yeah, I will catch you on Thursday. Have a good trading day. Hope it all goes well for you this week as well. Let me know on Thursday how it's gone, what kind of markets you've been involved with as well. So yeah, and I'll speak to you then. So cheers, guys. Thanks for joining the stream today. Really appreciate it. And I will speak to you soon. Cheers.